Hello, YouTube. It's here. We have to be so mindful of what is happening on the S&P 500 because with the FOMC in focus tomorrow, we have a really tight coil forming here. What I'm talking about are these pink lines or an apex. An apex means we have a period where we're consolidating and then we don't. So in this case here, the S&P did break out and is now back testing. What I want you to pay attention to though is that price is now getting within a range, which means it's getting tight, and we also know the volume's dropping off. So there will be a big move that comes next. When I look over here to the Qs or QQQ, what I note is that it has not actually broken out. It's inside its same wedge. Volume is dropping off massively, and we're right at the end of the coil or this apex, which means that we're either going to explode to the upside or we're going to explode to the downside. And this is really important because as we sit right here, people are still feeling really greedy, 58. And we went in a straight line higher, as I've been talking about for some time. So instead of trying to tell the market what it should be doing, what we have to be mindful of is what would actually cause us to have a dramatic move higher or lower. And greed would be one reason why, if we're going to go down, we're going to go down. So looking to the data that drove us today, we had ISM and JOLTS job openings, which both came in with beats, which drove the dollar up and stocks down. Tomorrow, we got ADP non-farm payroll coming out pre-market, and then the big focus is going to be on the FOMC. There has been enough discussion. I am not going to add to it tomorrow. Add to it right now. What I want to focus on instead is going to be the S&P 500 and the significance of this area. Why? Well, 384 is kind of a really important area. Remembering that we go here to our two boards, we're going to look at SPY on the right-hand side and SPY on the 1 day on the left-hand side. Where we sit right now at 384 corresponds with negative 20 off the highs. So where we are in that really tight daily coil means that, well, we're either going to push below, back into bear market, back to potentially our 200 weekly, or back to the negative 30, which would be 30% off the all-time highs, or the bear market bounce continues. We stay out of bear market territory, and that's it. Why? Our low of the week right now is 383.29, and when we look to a higher time frame chart, which is going to be the monthly chart, let's go to our monthly chart now for SPY. That's right. Today is a new month, so today we also have a low on the month at 383.29. If we decide to power up, that would be, in my opinion, a back test of 384, a back test of our May low, and an advancement. When I look at this chart, it's giving me an ominous bear clue, though. Why? Here we bounce off our previous range. We put in a hammer. We have a micro higher high. I'm talking 98 cents. And then that's the flush. That's the start of the big bear market. When I look here, 389.52, 390.39. Yeah, it's about 90 cents higher. And then what? Well, an immediate flush on the data we just talked about. So if this is the high of the month, I could also see that as a great rejection. It's close enough to 400, 10 points off. And then we go bye-bye. We go down, we go down, we go down. So I think there's going to be a massive move coming in the next little bit here. And as I look here, again, I'm going to remind you what I'm looking at. I'm looking at SPY inside of a really tight coil, which is already broken out. Now has 3 consecutive daily closes above the 50 DMA, just like we did in July. So if we get a bullish reaction, regardless of what Jerome says tomorrow, the reaction is what I care about. I don't really care what they say. Everyone's going to have an opinion. I care about the reaction. So what's the reaction? If we have 3 consecutive daily closes over the blue line now, 1, 2, 3, it's bearish engulfing, take it with a grain of salt. However, the last time we got above the 50, we only managed 2, and that was the spooky move lower. The market faded hard. So as we sit here right now, we got 3 above. Is it 3, and then we just go higher for a sustained move? I just told you the reason why. We also talked about it yesterday and on the weekend. On the flip side, I could see what could cause us to go lower. And what concerns me the most right now is the QQQ. And I say that because, well, we're not above our 50 DMA. We're currently below it, not even tested it officially. We got close to it, just can't do it. Then we look at, we're resting. Well, we're right here at the lower end, 1 crack. And what's that pink line? Well, that's our 200 weekly. So if we now look here to 2 boards, we pull up QQQ on the right-hand side on the weekly. You note that, we're like really tight here on the daily. And that level happens to correspond perfectly with our 200 weekly on the on the Qs here. at 275.33. Oh my goodness. This no look good if we go down. No, it no look good if we go down because as of right now, we are right on. We're back testing our downtrend right here, and if we can't hold it and bounce here, meaning go green tomorrow, it's probably going to want to flush hard. So the same thing is setting up on QQQ, but it didn't. It did not manage to make a new monthly high. It didn't manage it. Why? It just didn't. Tech was soft today. So this is really what concerns me, right? It gets my butthole really tight. It gets me worried. And the dollar has been advancing. So it's actually got 2 consecutive daily closes back above the 50 DMA. And it is now bounced off the previous top. So this previous top we established here in July at about 109.3. It bounced off. And the next high for me is right here. It's at 110.99, basically 111. What's our low of the day? 110.7. That's another check. It's another pass. And we don't want to see this thing up. So that's what really concerns me here going into tomorrow. A few more quick things for me to look at are just going to be what actually drove this. So here we got Apple, and we look at Apple. Oh, okay. So post earnings, where are we? Well, we're almost back to where we started. Right, that 7-8% move, incredible. Giving most of it back now, and we have one close above the 50 DMA now. So we had 2 above, now 1 back below. I don't know. Looks like a push pull off the 50. When I look at Microsoft. Down by 2%, pretty big for this company size. Still worth about 1.7 trillion, still in that $1 trillion club. It had a pretty big move. It's bearish engulfing too. Didn't make a new high though. So just consolidation near the bottom of the consolidation, right? So just forming a triangle, just wider. Closer to support though. Google, whoa, it's down in the dirt dungeon. That's a dungeon breakdown, whatever you want to call it. Massive red candle, right? Woof. Negative 4.3. Yikes. Amazon, not much better. Lower low after earnings. And what this kind of tells me is, hey, those earnings were probably not that good. And this was just a trap. So what it tells me, am I right or wrong? I don't know. The future will decide whether or not I'm right or wrong. Tesla, green, right? Happy to have that Twitter drama over, it looks like, at least holding up here. Meta, the leader of the $1 trillion company. Oh, yeah, everything's fine, guys. Meta's leading us here. It's the strongest company in the group right now. Oh, yes, that's the sign of a healthy market, Justin. Don't you know? Don't you know? And then moving on here to NVIDIA, 3 consecutive daily, is that 3 daily closes back above the 50 signals that there is some pressure building up. It's got a tight range. It's really holding it with a flag here over the 50. Let's see what it's got. Have to also remember that this could also be in part due to the news we heard out of China. Again, not confirmed to be true, but it's why the FXI is up by about 4% today. We're hearing that the lockdowns might be over in China. If that's the case, big boom towns. If that ends up being a fizzle, oh my goodness, look out below. So at the stage set, I really encourage you to be prepared for the rest of the week. And the video that's queued up now should give you a great chance to understand where we could go from here. Otherwise, I wish you all the best of luck into our trading. And if you want to join us and trade with me, Justin, click on the link in the description. Otherwise, I will see you tomorrow post FOMC. Thank you.